Good morning all, and good evening to some of you. Welcome to the HKUST Business School ESG webinar today. From global warming to more recently the COVID-19 pandemic, climate and public health challenges have posed continuous threats to our livelihood and beyond. I believe green finance is one of the effective solutions to address these global issues and make our planet a better place for all. As an international financial center, Hong Kong is in a unique position to attract and facilitate green finance investments. Here today, we are honored to have a panel of dedicated experts at the forefront of green and sustainable finance to share with us. Their leadership experience and first-hand industry insights will help us understand where we are today on the roadmap towards green finance and what we need to grow further. I hope you will enjoy the conversation and gain some useful insights on green finance. Together, let's contribute to strengthening green finance in Hong Kong and beyond. Thank you.
I'm Christine Lowe from HKUST. It is my honor and privilege to be able to moderate this panel. As our Dean Ka Yan said, green finance is the talk of the town. And I think for our panel today, whom in my view are the front runners, they are the catalyzers who've been working for many, many years to get us to where we are today. So today we have an opportunity to hear from them because as front runners, they are actually seers. They were able to see that what we needed to do was go from the brown to the green transition. And today I think we're at the cusp, if we're not already over the cusp. So without further ado, what I'd like to do is start with Annie Chan. You have their bio, so I won't go through the details. Annie, if I can come to you straight away, I think I met you maybe 15 years ago. And in those days, you were already talking about investing for good, investing for social return, as well as financial return. I remember you talked a lot about what you wanted to do, but tell us, how did you get on this track? What was it that brought you to believe in sustainability?
Thanks, Christine. As you're asking that, it's really bringing back memories. I started getting concerned about sustainability issues like climate change and resource limitations some 20 years ago. As you know, I have kids, and when my kids were little, I remember worrying about what kind of world they would live in when they grew up. And for a long while, I was feeling helpless because there didn't seem to be anything that I, as an individual, could do about these huge challenges. And then the 2008 financial crisis happened, and that really opened my eyes to the problems with the dominant economic order that pursues growth and profit, it seems like literally at all costs. And as an asset owner, I just thought that there had to be a better way of investing one's money. And that's when I got interested in sustainable investing as well as impact investing.
But that was like, what, in the mid-2000s, was it?
Yeah, mid-2000s. I think I was starting to have some ideas. I was actually going out and learning about things and also reading on my own, doing a lot of desktop research. And I realized that, this is something that's already, some people are already doing, and there's no reason why I couldn't join that crowd and do it as well.
Well, you were certainly a way out front runner in Hong Kong. Well, maybe I can come to you, Benedict. Benedict, again, I can't quite remember when it was, but you and I met again quite a few years ago when you were working for the Hong Kong Securities and Futures Commission. And at that time, you were already talking about integrating ESG into asset management and so on. So did you start then?
Thank you very much, Christine, and thank you for bringing us all together. As you say, I think we actually know each other because we came across each other in the early years when no one was really believers in this topic, that it would mainstream, so to say. And also when a lot of people were still asking what ESG was, because that was the most common question in 2013. What does it even stand for? So as to my own interest, it definitely didn't start in 2013. I think, to be honest, I was born with a very, very deep appreciation for nature. I did grow up in Belgium. I had the privilege of spending most of my actually early years, mostly in forests, actually in very lush forests. So having traveled throughout the globe and seen, frankly, the pollution that we generate as we go along our lives, in all the ways that we generate pollution, but I'm particularly focused on plastics. Plastics are things that in Asia still, I would say up till this day, drive me nuts. I said it's much longer and much deeper. It's probably from the crib, but it is the UNPRI that really got me really focused. And that was already 2000. I've now forgot, but it was in the early 2000s. I think Fatima may be able to remind us when that was. Yeah.
Okay, well, Elsa, you know, you've been running a Chinese language financial magazine in Hong Kong. Today, you're all into sustainability. That wasn't always the case. So when did it happen for you?
Oh, Elsa, you're on mute.
Unmute, yes.
Okay. Yes, thank you, Christine. And welcome to the concrete forest, Benny. Well, yes, back in, I think it was 2009 and 2010, somewhere around there, when there was a lot of corporate scandals around, like the BP oil spill, and you have the Mengniu toxic milk. And we had been into investigative journalism of the asset managers for a very, very long time, ever since I took over the publication benchmark. So I realized that, you know, back then responsible shareholding wasn't really a part of the sustainability world. So we didn't really know we were getting into the sustainability world in a way. So, you know, asset owners were suffering from these asset managers not being responsible shareholders. And we really had no idea what these managers were cooking their dishes with. You know, we don't know what were in the ingredients. So beginning 2013, we got really, really serious, and we used a kind of a carrot and stick approach with the awards we've been running, but digging really, really deep into the managers' practices. And trying to understand what they are doing to engage with the underlying investees, what they considered as good stewardship, how they are conducting their due diligence on the potential investees. So that naturally became our DNA afterwards. So it's part of our lives now. We're very dedicated into this, but I have to say we're very much into governance and stewardship in the entire, you know, sustainability world.
Right, Elsa, I certainly remember that you were very much you were a leader in talking about corporate governance, and, you know, glad that you're now on the sustainability issue as well. And Tella, I mean, you and I are both at HKUST, and it's great to have a colleague in you, and Tella, where, you know, you can do the rigors of the academic research, but at the same time, you're actually also doing really innovative things in the financial services area. So when did you get on board with sustainability?
Okay, so my journey started relatively late compared to you, only in 2007, 2008. So shifting from investment bank at the time, so very intense, that was before the crisis, and resigning for family reasons, then moving to UST, to the academic world. So with free time at my hands, because academia was at least less intense than the investment bank at the time, then I dedicate myself to charity and social enterprise. But being trained as a quant and a researcher at my heart, I couldn't help but looking at data and see how much impact that dollar, which goes to charity or social enterprise, have in society. So I started looking at impact investing, you know, and measuring this impact. And then it moved up the chain. Actually, first time I met you, Christine, was one of these social Asia events back in the time. So it moves from impact to corporate level, because I wanted to see the impact to be much more scalable and more meaningful on society. So I look at ESG aspect of it, how corporates are dealing with it, what are they doing? And as you move along the chain, then you see ESG is still important, but then climate risk is massive. So my focus shifted more towards climate risk, and that's what I think is something which I really like, because it has a lot of data and models. So it's something which is objective and not subjective. So that's what climate tells you, that's what Earth is telling you what's happening, and you have to measure and you have to act upon it. So it has been a natural journey trying to have a meaningful impact in society, but my take is using data and models and trying to measure these things. Yeah.
Well, terrific. And Pratima, I must declare that the organization that you work for, CDP Worldwide, I sit on the board, and CDP, I'm on the board because I think it's a fantastic organization. It's structured as a nonprofit, and it's really one of the first organizations to really be putting disclosure and collecting environmental data, for more than 20 years. But Pratima, tell us something about yourself. You were also from the financial sector, but now this is your life. You're talking about ESG and sustainability every day.
Getting me with all of these esteemed speakers. And I think when I was listening to all of the stories that, from Annie to Entella, I think there's a lot, there's a little bit in each of those stories that kind of resonated with me. And I think for me, at least, as was with, some of the other speakers, the global financial crisis was a real silver lining, I feel, in a dark cloud when it came to ESG and sustainability. The global financial crisis happened. There were no new deals happening at the time. I was at my firm, and I happened to meet with UN PRI, the Principles of Responsible Investing. They wanted us to come on board as a signatory. I was, no new deals. So I was like, okay, let's see what this is about. And I started reading up more on it. I was completely hooked. And I started trying to, find out what more is done in ESG, and why is this sort of intuitively not yet fixed within finance today? There was a lot of talk of why ESG and why sustainability. I was at the convinced level. The big question was how to, and that really wasn't being answered. So I put myself through a part-time school and did a master's in environment and business, and I thought I could sort of pull that in with my finance background, and here I'm at CDP, which is I think at the right cusp, because it deals with these issues with financial investors and corporates.
Right. Well, maybe Annie, I can come back to you, because I regard you as the sort of first person in Hong Kong who speaks about it, openly. Your desire to shape your portfolio with sustainability at the core. And then in 2013, right, you started divesting from certain investments. I mean, you've had a whole range of experience in dealing with the financial sector. Can you kind of summarize for us what that journey was like and kind of where you are now?
Sure. So I think I probably formally started around 2008, 2009. And because I was not a professional investor, my background is in the law. I don't have an ounce of, like really kind of investor sentiment in me. So I knew I needed external help. And in Hong Kong, as in most of Asia, I think my first point of contact would be, go to a bank and see, well, what products can you offer me? How can you support me if I wanted to invest responsibly? And back then, people mentioned PRI. I talked to the banks about it. I said, I'm interested in these principles, and they had no idea what UNPRI was. They had to go back and Google it. And I realized that, I wasn't going to get the kind of support that I needed. And so anyway, over time, I built up a team that comprised international advisors as well as local staff to support my investment, as well as my grant activities. And the thing is, as I dove into kind of kind of the concept of, what's driving me to do this, I started seeing that, really investing in philanthropy weren't really separate things, and they shouldn't sit in separate silos. And so we ended up taking what we call a total portfolio approach, where we consider, investing and philanthropy simply as different ways of deploying capital, except that, they all generate a different blend of financial and impact return, and your expectations about those returns ought to be different depending on, what you're doing. And then, yes, as you mentioned, in 2013, because of my concern about the climate crisis, and also in response to the divest invest movement, which started in the US and was going global, I decided to remove fossil fuels from my portfolio. It wasn't too difficult, actually, because we were already taking this sustainable approach, integrating that lens into how we choose our funds and investments. So we didn't really have that much to do in order to kind of cleanse our portfolio at that point in time, and to redeploy into like clean energy, things that were better for the world, and also in light of the climate crisis. And then in 2016, we actually summarized our journey up until that point, how we built our team, our journey, how we invested, our examples of our investments and our grant activities to explain our total portfolio approach. And the reason behind that was to advocate for this approach amongst other asset owners, because it wasn't enough for just one family office to do that. We wanted more people to come on board, and we also wanted to show that investing with all of these lenses and considerations can still generate you a satisfactory return. And of course, we can see that in the last few years, the trend has really picked up. And in order to strengthen the community around impact investing and sustainable investing, we also incubated a platform called the Sustainable Finance Initiative, which now has become a separate independent platform to better service other asset owners that are keen to get started on their own journey as well. And I'm very pleased to tell people, not that that's the most important driver, but I know people always ask about returns, right? And I would tell them that, since inception, we have had a continuous average 5% returns until, our report came out, and we addressed that in our report. And since then, in the last 2 years, just because of how strongly the market has been performing, we have generated an average 6% return. Now, I have this thing about, I don't talk about maximizing returns. We talk about setting a target that would meet our needs. And that would include, our costs, expenses, my personal needs, and also our grant making needs. And I'm pleased that, all along we've been able to generate a return that meets all of our needs, and that keeps us very happy.
All right, terrific. Now, obviously, in order for you to make assessments, you need data and information. And Pratima, maybe I can come to you, because CDP, that's what it's about. And I think everybody wants to get into this space about disclosure, having the proper data and so on. Tell us something about where the world is today and where Asia Pacific is today on these issues.
Yeah, I think, for those, I'll just probably jump a little bit back before answering your question, Christine, for those who don't know CDP. So CDP has been collecting climate and environmental data from corporates since, for the past 2 decades. The focus really over time has been, how do we put that intense focus on standardizing the data so that it can be better used by financial institutions? Because one of the issues is, most of the sustainability data that you get today, it cannot be benchmarked one company versus another. So how do you start, facilitating that? We have today, on an average, about over 9,000 companies that respond under the CDP framework. And they provide all of their climate data through the CDP platforms. Asia is about 3,000 companies. So it's a fairly large universal pool for us to get some data and insights on. when I moved to CDP, I realized how much corporates in the real economy were actually much ahead in assessing all of their climate risks and opportunities, whereas the financial industry is a little bit behind in actually pricing those risks and opportunities. And I think that is still probably an ongoing issue within the financial sector. I'll just give you a certain few examples on this. So for example, we have a company, a beverage company in Southeast Asia, where they have reported to us that they started having issues with sourcing soy from Australia. And they realized that this was a long-term changing pattern, climate changing pattern, and this was going to be a perennial issue. So they had to rework their entire supply chain to ensure that they start getting a steady flow of soy from other parts of the world. Now, this is a clear indication because this has financial implications. But for financial investors that are invested in this company, I'm not actually aware of how much they were able to assess that and whether they are actually using that assessment against other beverage companies they might be invested in to be able to benchmark and say, this is probably thinking ahead and adapting a lot faster than within its business operations versus other companies. And there are several such other examples that are happening around the world. I think 2019 and 2020 were, we saw a big push in the Asian markets with the central banks really coming forth with their announcements on climate finance and for the financial sector to be much more aware of what are the climate risks within their portfolios. And we saw these announcements come from Hong Kong, we saw it from Singapore, we saw it in Malaysia. I was just on a call yesterday with Malaysian, they formed a cross-sector agency called the Joint Committee for Climate Change, where they're trying to provide this capacity building to financial institutions. So a lot of momentum has come in from the central banks, which is why we're seeing, at least in Asia, a lot of the financial institutions suddenly wake up and say, we need to start incorporating this data. We need to start understanding what are the portfolio level risks and emissions that our portfolios are generating, which are the red flags that we need to understand what we need to start divesting from or what we need to get smarter about within our investing strategies.
Right. And, apart from, I think, the governments in the region, we also see big investment funds like BlackRock. They're now declaring that they're going to put sustainability very much into their work. I mean, I presume that's also going to really push the envelope. I don't know whether Entella or Benedict or Elsa, any of you would like to take this up, but Entella, maybe I can come to you. I mean, you've started a climate tech and fintech company, and so what are you thinking about?
Well, that's precisely the point answering this question and what Pratima was saying. I always tell ESG is very important, but if you go climate, the impact of climate is bigger, but it's also more tangible. So people now start understanding that when you look at climate is not like 1 degree higher tomorrow or today relative to yesterday. It's more medium and term impact on your investment and can be any kind of investment we're talking about. But then when they realize that this gets priced in the right way, so once you have this information, once you know how much supply chain risk you have in the next 5-10 years, or if you're in real estate, you're building for 20 years at least, 20 to 30. So once you know that typhoons will be the winds will go at 300 kilometers per hour, which is far above the building codes, or the extreme temperature will be 3 degrees higher in summer. So this information gets incorporated as of now, once you have it. So the impact of climate is not medium and long term, it's right now in your portfolio level, in your decision making, in your operational risk, in your financial risk. So once the companies, they understand this, then they are very eager to measure this risk because it has a real P&L, profit and loss impact in their bottom line. So it's really important, and they start looking, and that's, I think, asset manager like also BlackRock and others and financial institutions, all these risks get concentrated, are starting seriously to look into that, not just for disclosure, but to make better investment decision. It's about being before that happens, right? Not taking the risk or mitigating certain risk, but also capturing opportunities in terms of renewable, knowing where the wind farm should be, not where the winds will be declining 5 years from now, and you have no more winds to turn on your turbine, right? So climate is both risk and opportunities, and it just making that information available to financial market in the same language they understand. I keep on saying that because that's where I try to bridge the gap between environment, between climate and financial world. You have to make all this climate data on rainfall, etc. You have to make them readable and usable from the industry so they can take decisions on it. They can integrate in the risk models. They can integrate in the cash flow, in the valuation. And I think that's where I'm positioned in between these two big.
Right. Well, I think that's such an important point, especially for universities like HKUST, because apart from training talent in environmental science, actually the people who are working in finance also need to know or to understand the 101 of, you know, all of these issues. But Elsa, let me come to you. I don't know amongst the audience whether anyone haven't heard of Blue Onion yet, but if you haven't heard of Blue Onion, you need to look this up right away. You know, Elsa, because of your finance background and because, you know, I didn't know you're actually quite technical, you know, you're techie. You've created Blue Onion, which is focused on asset managers. Tell us what you're now able to do for them. Unmute. Don't forget to unmute, Elsa.
Thank you, Christine, for such kind encouragement. Yes, in fact, thank you, Antela, because I really never passed a math course in my life. So I can't do arithmetics or basic maths and all the tons and tons of carbon emissions. You know, I'm freaked out. And that actually translates the motivation behind me building Blue Onion, because I think a lot of people like myself, we get freaked out when we look at all these very technical terms when it comes to climate and temperature. My background is also in law. And so, you know, I make sense out of things, but I can't do the math. So what I was trying to do, you know, just like any other asset owners, because I also sit on a small family office as an investment governor, we are constantly approached by private banks, you know, selling us things that we don't need. And when we want something, they don't really have. So, you know, and then the worst is you go to these asset managers and they're all telling you that they have the best ESG metrics. They have the best proprietary ESG model. And you just have no idea who has the best model, right? So even though there's still not a standard in the market at the moment, we reckon we should have some kind of a platform to tell that whether people are you know, telling lies. Okay, I hope I haven't offended any of the 500 audience in here, but you know, asset managers, they always, you know, they have a books to keep, they have business to do, and you probably saw me rolling my eyes when you mentioned BlackRock. You know, I just don't think anyone would wake up in the morning and think that, oh, the 65% of my fossil fuels in my portfolio was wrong. You know, I don't think anyone would just get up in the morning and figure that they've done something wrong. So I'm not, you know, exactly optimistic, but I hope that the commercial agenda would drive a firm like this together with the other 5 largest institutions who manage the biggest ETFs and active funds, who happen to be in the worst, the lowest percentile in terms of ESG performances. So hopefully, you know, with a huge giant like that making the right moves, we're gonna get a better world in a way. So yes, we define sustainability. Very simply put, it's something here to stay for good, something that would survive generations after generations. So shockingly, if you look at, you know, what happened during COVID sell-offs, even within the mutual fund industries, all the mutual funds that did not take a solid ESG approach, we call them sustainable funds sometimes, their mortality rate is actually quite high as compared to traditional funds. So imagine you get into a fund and then they just close out. They just close off because of the very bad constituents they put in place. So Blue Onion takes on a mission to expose, in a way, what these managers are integrating into the constituents. So we're not investing in one security, we're investing in multiple or 100, 200 securities through a manager that we either through a private mandate or pooled vehicles by the general public. So these managers have a lot of undertakings when it comes to deciding, what to put into their funds. So what Blue Onion does is really to expose them. First of all, to look at every single ingredients that they're cooking our dish with, and then examining the underlying constituents, the underlying companies, their ESG behavior along 22, 23 sustainability topics. We look at their global compact behavior. We look at each and every one of the companies' temperature alignment. Currently, we're looking at the Paris Endeavor. So their short-term and their long-term alignments, and also their business involvement. So practically what you can do with Blue Onion is to zoom in to, screen out all the noise. Like, for example, I don't want to look at anything that has a firearm exposure. I don't want to have any exposures to gambling or adult entertainment, or I can tolerate a 5% alcohol. Oh, all right, that's not a good example. 5% alcohol tolerance within my portfolio. So you can save time by screening into, having a negative or a positive screen of the entire 170,000 funds on the universe to zoom in to something that is really aligned with your values. So that, in a way, hopefully to penalize funds that are not doing the best jobs, because you would automatically be exposed what is in your portfolio, basically in your strategies, and how you're getting there. Also qualitatively, how you're conducting your stewardship, how you're engaging, your frequencies, and what sort of research depth are you putting into your team to make sure that everything that's put into the portfolio is for the benefit of the investors.
Right. Well, what I find interesting is, Elsa, you've kind of, with Blue Onion, become a kind of, you're the guardian, the greenwash guardian. And I find looking at Green Onion, I mean, if you haven't, looked at it, you've got to look at it. All these funds that are out there that sells themselves as, ESG funds. And then you look at the score and you say, that's pretty low, right?
Yeah.
Okay, let me look at something else. So Benedict, maybe I can come to you. I mean, you've worked as a regulator, and where are we in the regulatory world? And today you're with the Bank of International Settlement, sitting in Hong Kong, and you're running their innovation hub. So there are obviously so many connections for us to stick stuff together in this journey from brown to green. So maybe you can share something with us.
Yeah, so I have to say, I find it nearly hard to pick because there are so many areas of focus you could pick, right? So at the Bank of International Settlements, we are the convener of the central banks. And as was mentioned, I think, by Pratima, the central banks are increasingly focused on the disclosure of banks. As Pratima said, actually, the banks are maybe a little bit behind actually on this, because what is now happened as a result of this asset owner focus, I think Annie is an example of an asset owner who was focused very early on. And then consequently, we've had asset manager focus. So BlackRock is an example of that. And then let's say the tools they can use is tools like Blue Onion and other ESG related disclosure tools, right? That allows them to analyze their portfolios, and then later, as Elsa says, justify in their fund documentation exactly how they are checking their portfolios. So all of these different things I covered actually in the research in 2014 at the SFC. see in a very simple chart of how the asset owners need to put pressure on the asset managers. And that then leads to these corporate disclosures. And we're now, I would say, in a virtuous cycle on that. So I could focus on that, but in my view, we're already in a virtuous cycle on that. So where I think that, as said, maybe we're a little bit behind still is in the banking portfolios. The banks are increasingly realizing that there is a huge green opportunity. And for example, they come up with very interesting green product. So for example, green loans, but also green deposits. Green deposits is actually something really interesting to look at. And I think it can catalyze a lot of people to put their deposits in these so-called green deposits, and that money can go for good in massive scale, so to say. But where the lack of focus is, I think, is on the brown assets, i.e., which are the assets where financing has been extended in the past that are still sitting on the balance sheet of the bank and that are going to turn bad. So it started with stranded assets, the focus on the stranded assets, because that's kind of obvious. You could see it, it's easy to explain. But I think there's a lot more brown risk on Earth, so to say, our negative nature risk on Earth than just the stranded assets. So for example, we've all talked now about ESG, then we've talked about the evolution to focus on climate change, but more recent evolution is now on focus on biodiversity impact. So as the expectations of humanity actually evolve along that scale, the loans that have been extended to companies that are making negative impact will actually become more, over time, more visible, and probably not the right thing to fund or to have in your portfolio. So as said, I think the central banks will focus more on the disclosure, the stress testing, the loan portfolio analysis, etc. Now, that said, for my role, which is at the BIS Innovation Hub, I've chosen a very niche focus, which is to think around how can we use technology for bringing green bonds to retail investors in small denominations, and on the back end, have the disclosure and the tracking through meters and new technology like blockchain in order to create full transparency. So you could think about my let's say, my focus as very niche. And the reason it's niche is because it can be executed. When it's niche, it can be executed. If it's big, it's harder. And secondly, because it can incorporate all these different elements that we need. We need retail engagement, we need millennial engagement, we need connection to green bonds, we need some methods to address greenwashing, for example. And in Hong Kong in particular, we could connect some of these efforts to a whole new class of banks, which is the virtual banks, where the millennials are also increasingly opening their accounts. So as I said, that's a POC, a proof of concept, that I will be focusing on in the BIS Innovation Hub. And we announced that last Friday. So this is public information, and you can see it in the BIS work program for 2021-22.
Right. What I find really exciting is that all of us are sitting in Hong Kong, you know, and these things are actually happening, and it's so exciting, I think, for us to hear that there is this active blending of policy with technology, with investments. You know, we have asset owners here. We have, you know, we have the full range of people sitting right here in Hong Kong. That is so important for Hong Kong to be a green finance center where you have all this capability. So if there are, for the audience, if you have questions, you know, please type them in and I'll take as many as I can. I have looked at some of the questions. There's quite a number who want the URL, who want information about Blue Onion. So we'll give it to them after the event. But maybe at this stage, we can talk a little bit about the future because, you know, I mean, Benedict, you've already shared something with us. But going forward, for example, you've done a lot of things that people are just getting around to doing. Where are you going? Because I think your trajectory will also tell us eventually where we'll be heading?
Well, that's a bit of a challenge. I do bring a lot of myself into the process, I think. And everybody's been talking about climate change, and we're no exception. I think, we're also really sensing the urgency of it all. And so we're trying to apply an even stronger climate lens to our portfolio. And I mean that for both the investment side and also our philanthropic side. Let me talk a little bit about our investment side first. So we talked about the divestment in 2013. So we're trying to strengthen that fossil fuel free policy from merely exiting from any direct oil and gas extraction production companies to excluding things like unsustainable utilities or funders of those utilities, and also a stricter exclusion of harmful exploration and production activities. We're also trying to extend that to our cash management to integrate a sustainable lens to that. So we've been working with our banker, Pictet, to apply an ESG and fossil-free screen on not only this bank, but also on fiduciary deposit counterparties. And we worked with them and shortlisted 7 banks from over 20 candidates. So we're hopefully sending a message to our banks that, we're also looking at you, right? What are you lending to? Or how are you monitoring, your activities to what, Benedict was talking about earlier. And of course, with our existing asset managers and banks, we continue to engage them on their climate change policy. Things are changing. More data is becoming available as investors demand more. And so we have to constantly kind of update our views as well and challenge our managers to do even better. On the philanthropy side, we're pursuing an interest in looking at nature-based solutions. Now, this is kind of an un-Hong Kong thing. We have a hard time, even protecting our own backyard. But I think in the context of climate change, we feel that investing in our natural resources and natural landscapes are super important to avoid further degradation. And so we developed a natural capital initiative focusing on Asia. And a couple of things that we've done is we're using a blended finance approach to support pilot and proof of concept projects in Asia, working with a nonprofit called Convergence, which is based in Toronto, and they're an expert in blended finance structures. So we're partnering with them to seed some innovative projects around Asia, hoping to bring along entrepreneurs who are developing these nature-based climate solutions. We're also exploring, because compared with some other geographies, especially in the West, we feel that there's fewer pipeline and fewer talent around those issues. So we're also thinking, more upstream. Do we want to explore maybe developing a venture builder to help more people who are interested in this get started? And to a point that I think Benedict also mentioned, it's about talent as well. And you were also talking about that, in the context of a school like UST, for example. You have a great Department of Environment. You also have a great business school. But we really need people to come together, with those 2 skills and weave them together so that we can leverage the power of finance and channel, additional capital that's so sorely needed in the conservation space to really develop projects that are closer to home. Asia is a really important region when it comes to conservation and these climate solutions. So we would be trying to do a little bit more in that space. That's
right
for us.
Right. No, I think that's so important. I mean, of course, in Asia today, it's not just the central banks that are moving. I mean, the central banks are moving in a way as the governments are moving. We have China, climate change is a major policy issue now, carbon neutrality by 2060, and at the same time dealing with biodiversity. You know, Japan, South Korea, and others are all, you know, kind of piling in. So maybe our last round, because we have about 12 minutes left, may I ask each one of you to share with us, you know, your path forward? Maybe maybe Pratima, please give us some final comments and point the way forward.
I think just to pick on what Benedict had said earlier, you know, I think the whole disclosure movement and getting companies to disclose, I think that is well underway. Even in the year of COVID, we had a 20% increase in Asia Pacific of the number of companies that reported on our platform. So it kind of shows you that disclosure, at least on climate related financial risks and opportunities, is going to get normalized among companies in this region. The focus next is really, how do you ensure that whatever is being identified as a financial risk gets enough access to capital to be able to mitigate or transition out of that risk? And I think that's going to be a challenge. I don't think financial institutions have quite fixed that yet. There's also issues with, you know, sometimes financial industry works in a silo versus the corporate industry. So, you know, you have these disclosures happening, and then on the other side, you have green bond principles and sustainable bond principles, and somehow those two languages don't connect. And so CDP is working on actually getting all of that alignment mapping done. So, you know, you have a report, how do you go to a financial institution and say, I'm already, you know, having this, I want to transition out. Do you have a loan for this? And that's the same language that a financial institution can also understand and relate upon. So I think that's probably the way forward. And that's what, you know, CDP is really excited about.
Good. And Tella?
I totally agree with all what is said. I just need, from my experience, disclosure is great. Companies are disclosing even more. However, we cannot afford to have the same pace as we had ESG disclosure, which took years and years to kind of convince companies to disclose. With climate, it has to be much faster. The problem with that, and regulators are pushing for it, the problem with that is quite a hard area for companies, not just to disclose, but then disclose the first step. The second is understand, and the third is integrate that in your decision making. So the second and the third is missing. Now these are, being in climate tech is a very difficult area in a sense, but it combines very heavy climate models with financial models and the technology. You need to run supercomputers, you need to run AI. So these are not easy startups to start with. So they need funding. They need a lot of support, be it from government or other bigger grants or bigger available funds in the market. And that's what is missing. So if you want things to move faster on a government level, one has to really also engage more on these kind of solutions, because it's not something one can build easy and bring this kind of technology in the market. So what am I doing is basically this one. So with Intensel, trying to bridge the gap of tech, climate, and finance, and push it forward with whatever we have available at the source. It's an area with deep expertise, but we need to do it. There's no time to wait. Yeah.
Elsa?
Yeah. So we realize that the low adoption rate for asset managers to go on an ESG journey, typically the answer is there's no standard, right? So it's not like, I want to incorporate an MSCI benchmark and then I can measure my returns against the benchmark. So typically there's no standard, and rightfully so. I think there will never be a standard because every mandate is different. Every company has, every business is different. So what we're trying to do next is really to build the platform out to help these asset managers, especially the smaller ones, the boutique ones, who are doing a fantastic job in researching companies and investing for returns, but to help them to somehow customize their materiality framework and given some base framework that, typically like SASB or CDP or even the SDGs for them to lean on, so that they can try to figure out their climate related risks and other material issues. Because what asset managers are doing is actually having a great impact on everyone's lives. Every bank, retail bank is circulating and distributing a lot of mutual funds, which the asset managers are in a way having a negative or positive impact on their lives. So we wanted to help these companies and asset allocators, including the banks, and asset owners to build out a portfolio using a customized materiality framework. And because on our platform, as of September last year, we've spotted that out of the 70,000 funds we covered that has a temperature alignment score, close to about 50% are pretty much aligned short-term and long-term, but there's still about 40 to 50% that are still overheated in the 3 degrees scenario. So we wanted to give more transparency to help these asset managers a little bit more to have an accessible platform so that they can play around with and try to understand what they're doing. Because most of the time when we show these asset managers, they have no idea the companies that they have integrated to the portfolio was actually that bad. So that hopefully would increase the transparency. And also, further down the road in 2022, we're going to build out an impact hub, helping the current generations to really identify projects that are really achieving impact results and also investment returns, because they're, the generosity they have is pretty scary sometimes.
Right. Well, right now we have 22 questions, and if I were to kind of group them, there are a number of questions that are quite technical. So people obviously say, how can we remove the brown from people's portfolio? So there are a number of questions in that category. Another range of questions is, okay, we're talking about Hong Kong and, Hong Kong as a finance center. There's some also interest in comparing where Hong Kong is to perhaps other financial centers. And, where is it that Hong Kong really has an edge, and, where is it that we need to make up? There are a number of other types of questions, but I think to end, maybe we can pick on these two questions. So Benedict, maybe I can come to you first, since you're so familiar with what other finance centers are doing.
Yeah, so I actually want to focus a bit on Hong Kong, because when I look at the box, there seems to be maybe some people have not taken full notice of what Hong Kong is doing. So if you do just Google HKMA and then green finance or sustainability, you will find quite some information. But there was a key development on 17 December 2020, which was the cross-agency steering group launch of its strategic plan to strengthen Hong Kong's financial ecosystem to support greener and more sustainable future. This has some general principles in it, but it includes commitment to the TCFD, as well as commitment to a number of international working groups around common ground taxonomy. And also, for example, climate-focused scenario analysis in banking portfolios. So for those of you who might have missed that, because it was kind of around the holidays, this is noteworthy. The other question that I saw in the box is the official sector's commitment or leadership from a financial standpoint. The HKMA already on the 7th of May 2019, which is a while ago now, made public that the exchange fund had started incorporating ESG factors. And for example, for the BIS, it launched I think it's a $2 billion USD green bond fund a year ago, and it just last week launched a 2 billion USD Euro green bond fund. And as I mentioned, the BIS is the convener of the central banks, but it also helps invest the money of the central banks. And this, therefore, is a commitment of the central banks to green program, and so to say. Now, on the question on brown, because there's quite some questions that are targeted at understanding I guess the implicit question is, do any of us believe that there will be a world with, for example, no more travel, right? Because then there is no more negative carbon output, so to say. And the answer is no. I think some of these let's say less beneficial from a nature standpoint industries will continue, but I do think these industries will increasingly, as Pratima said, to a transition towards cleaner energy. And the airlines, the plane producers are already trying that, but it's going to take some years, but they're on the path. But in addition to that, I think over time you will see a carbon offset market developing. So carbon offsets will develop, investment in green will develop, and other forms of either transitioning or reducing the negative exposure for industries that inherently have a slightly more negative impact. That would be my answers to these various questions.
Right. We have some final moments, and perhaps I could ask you each one to, because some of you have also seen some of the questions, to make a final remark before we end. Annie, perhaps I can start with you.
Yeah, I'm scrolling down, looking at some of the questions. I think the one that Robert asked about, should asset owners divest from other kind of carbon heavy industries like cruise lines and airlines. Benedict talked a little bit about that. Obviously it's a personal choice. I've always asked myself questions like, should I be divesting from more lines of industries because they don't seem to do anyone any good. But it will be a personal choice, and at the same time, I think those who remain interested in having a diversified portfolio, I think it's this trend about really focusing on best in class, right? Choosing those that are doing the most responsible thing that they can within their line of business is the way to go. And then I saw also one comment about, the role of asset owners. Yes, I completely agree that asset owners are hugely important in driving this change. This is the reason why we've used our voice to advocate for this and incubated the Sustainable Finance Initiative. And I think for any of the people in the audience who are asset owners and are wanting to get engaged, please reach out to them. Not only do we support one another in terms of figuring out how to invest our own assets more sustainably or for impact, but we also engage as a community to make submissions, right, to public consultations by the SFC, by HKMA, sharing our views about what we would like to see them do as well, so that as a collective voice we can drive some change as well.
Thank you, Annie. Pratima, pick any question that you might want to ask if you can see the questions.
Yeah, I saw a couple of questions and I just wanted to touch the green versus brown strategy as well, because this is an area that CDP has been working on. When the TCFD framework or the climate related financial disclosure framework was launched, we actually realized very early on that it's quite easy for a financial institution or any services company for that matter to be declaring its emissions or dealing with the emissions within its business operations. It's slightly different, so the framework has to be thought of in a slightly different way for financial institutions. So we consulted with 25 financial institutions globally to work out a questionnaire that turns the TCFD slightly on its head. And the focus is really on understanding what is a financial institution's current green versus brown strategy, where do they intend to go, and what are their present portfolio emissions and whether they are aware of them. There's about 357 financial institutions globally that responded to their questionnaire this year. And in April, we should be coming out with a report on this. So this should really, I would say this is probably the first in the world where we get a proper understanding of where is the awareness within financial institutions of their own green versus brown strategy, and what are, how aware they even might be about their portfolio emissions. So that's sort of one area. The second question that was put out there was, the comment on Mark Carney and TCFD, and sort of, the TCFD getting normalized, and what are our opinions on that. I think it's a great starting point. Our sort of sense is we almost need to divide ESG into two ways. One is identify the ESG metrics that directly link or can be directly interpreted into enterprise value accounting. So that people or financial institutions are able to assess, at the very least, those ESG metrics first, and then start also taking into account the risks in other ESG metrics. And that is something we feel the TCFD falls very nicely under. So you have financial accounting, and those frameworks are already very well established. And overlaying that, you would have the TCFD metrics and other ESG metrics, which directly interpret into enterprise value accounting. And then you have the rest of the ESG metrics.
Thank you. Elsa?
I want to thank the audience for their interest in Blue Onion, but the portal is actually highly curated for asset owners and also institutional investors and gatekeepers at the bank. So I would love to leave my email address for you guys to get in touch with, so we can kind of like qualify you for the usage, because we have entrusted information coming from the asset managers themselves. So we need to be, the portal has to be highly curated. Thank you for your interest.
Well, anyway, I don't think there is anything quite like Blue Onion in the world. So, you can be sure that lots of people will be interested. And Tella?
I don't know, the questions are so unique and so in-depth. It's difficult to tackle each of them. From what I see is that many of these questions compare Hong Kong to the rest of the world. For me, it's not about Hong Kong, China, or Japan. Like in our company, like the solution we take are global. You analyze, you may be a Hong Kong company, but you own assets in Florida, you own in London, in Jakarta. So these solutions have to be global. It's just how much support you get from the public sector to bring this solution to the private sector. And I'm saying that private sector because if you want the needle to move, it doesn't have to be just government or public capital. It has to be private capital as well. So to make that shift, to make the private capital move, you need to give them some tools. I think that's the role of the government. You need to provide the infrastructure in place, but also you have to give tools. And I think MAS in Singapore is doing a great job in enabling solutions for green transition. So it's from brown to green. So there is this needs for tools. You can't just keep talking on a high level, but not really helping the private capital make decisions which will help us mitigate the carbon emission. So that's my take. Yeah.
Right. Benedict, you've been so good at kind of summarizing and clarifying all the different issues. You're the perfect person to end this particular round.
Okay, I'll end it very, very simply. I was actually just typing in, so I'll finish typing. So for anybody who wants to learn more, I really think that this documentary called Our Planet Too Big to Fail actually very well sets out the role of the financial sector. So as I started, I think everybody of us has a role, however minimal it is. And to go back to my plastic obsession, you will always see me walk around with 2 bags. And a lot of people are asking, why does she need 2 bags all the time, right? And the reason is because I never want to take another plastic bag if I can avoid it. But sometimes I can't. Like this morning, I had to take a bun in a bag, which I wasn't very, very excited about. So that's what you can do if you're not in finance. You can do all these small things. But if you're in finance, then I really think watch Our Planet Too Big to Fail. It has some very salient statements, including one that will stick with me for a long time that said, look, this sector is some of the brightest minds on the earth. If we can't figure out this problem, it's really honestly below ourselves, right? And below our abilities. So I have a very strong belief that we're now on the right path in a virtuous direction. And I'd say, let's keep going. And thank you to the person who noticed this all-woman panel. So over to you, Christine.
Right. Well, maybe I can just make a few general comments. I mean, I agree with you. You know, for those of us who've been around for a long time on this brown to green transition, I do feel this moment is on the right track. But I think all of us also know that to get from A to B and B to C, we need to move with a lot of people with different experience and discipline to be working together, because this is a revolution. And you know, the world has a lot of money. The world is putting trillions of dollars into the fossil fuel industry, for example. The world is spending lots of money, both in the public and the private sector, in infrastructure development. Some are better for biodiversity, some are not so good for biodiversity. You know, we can exploit forestry because forest is an important resource, but we can do it sustainably. There are ways to do it today. You know, so putting the knowledge together, redirecting the trillions of dollars that is going into the brown economy and switching it to the green economy, we know it's possible. And Benedict, I agree with you. You know, in the financial sector, there are a lot of clever people. I mean, in the engineering sector, in the science sector, in the design sector, right? And, you know, there are a lot of very brilliant people, but everybody holds a little bit of the answer. And maybe the finance people, maybe they're like me and Elsa, you know, we can read and we can think, but we're very shy about our ability with numbers. But even there, I think today we don't need to be so afraid. If we were working with people, I mean, frankly, what do business people do? They don't know everything. They contract a lot of what they need to know to specialists. But if they would just perhaps not take all the decisions just themselves, but be more informed, you know, better informed by other disciplines, this is the nut that we can crack. And, you know, we believe in the science, if we believe climate change is existential and we really need to do something in the next 30 years, that's a really, really short time, particularly for some of our younger professionals. It's in your generation that you're going to have to solve this problem. So, you know, it can be done. The knowledge is here, the money is here. We need policy. Governments need to be serious about focusing what it is that they can do to drive the capital from the brown to the green, right? They need not necessarily subsidies, but they need policy signals. They need tools, right? They need to help people to create these tools to do so. So today, thank you so much, ladies. You've shown us and you've told us about your journey and you've given us lots of ideas. All the questions that have come in, thank you very much. Thank you for staying with us. And, you know, these are ladies and their organizations. You guys got to run after them. Pratima, you're doing master classes in Hong Kong, you know, on telling people how to do disclosure. Elsa, your blue onion is already all there. Benedict, you are here, you know, sharing your, you know, techie work, bank of settlement, international settlement, but doing innovation, right? And there are people like Antella who are doing research and, you know, starting techie companies at the same time because she's passionate about how to deal with the climate problem. And then we have Annie, and Annie is telling us, right, that she's working with other asset owners, other investors in trying to go on this journey, expedite this journey, and expand the brown to green transition. So thank you very much. On behalf of HKUST, we hope we can do this again soon. Bye, everyone.
Thank you.
Yeah.
Bye.